From Florida, Mr. Posey.
Thank you, Mr. Chairman. Mr. Sperling, you seem to be the popular one today, so I'll ask you. When discussing how they arrived at the decision to request $700 billion from the American taxpayers, an aide to Secretary Paulson, as you may remember, made the infamous statement, it's not based on any particular data point. We just wanted to choose a really large number. At least for some of us on this committee, 30 billion is also a pretty large number. And would you please describe in detail for us how you arrived at the 30 billion number that you're asking us to authorize?
I think that $30 billion reflected the best efforts of the people at domestic finance, in Treasury, having consulted with different community banks as to what we thought the maximum amount of participation would be. You try to give the best amount. I think the important.
Okay. That's good. So in other words, it's another Hail Mary.
No, I didn't say that, sir.
All right, I said it. That's what we've done so far. What gives the administration confidence that the 30 billion will succeed where 700 billion failed?
So here's some very important differences. One, this is targeted just to small banks. You can only get the 5% of risk-weighted assets if you are a community bank under $1 billion. Those are banks that average about 200 million in assets. They are the Main Street banks, the community banks, the neighborhood banks, the banks that do relationship lending to small businesses that I think many people in this body have asked us repeatedly to focus on. Secondly, this is performance-based. A lot of what people were upset about was the idea of a perception of benefit without proof of an increase in lending. The reason why, so we have an initiative where it only costs the taxpayer, there's only a benefit going in the dividend if you are increasing your small business lending over the past year. And in fact, if you don't, the rate actually goes higher, making it even that much more performance-based. So I think it is very different in that it is for small banks and it is performance-based.
So you're trying to get some more money out there. Mr. Micah has a proposal to get some more money out there without the federal government pouring it out of their bucket. What do you think of that?
I think that, as I said, I think we are willing. We have been working with Mr. Micah, with Congressman Kondrasky, Senator Udall, and others, and think that we could that we can support going to a higher member business loan limit. In fact, we're willing to go as high as 27.5% for some banks, credit unions who are approved by their regulator. However, we want to make sure they've been doing at least 5 years of member business lending. We want to make sure they have 7% capital equivalent ratios. We want
but I'm just surprised that wasn't part of this plan. I mean, here we have money that's already out there without throwing any more taxpayer money at it. They want to help solve the problem, but you apparently don't think that's a good idea, or that at least that's on the back burner right now. Why didn't we put some of the public money up, some of the people that want to help solve this thing, without more taxpayer help? Why don't we give them a little bit more priority?
Well, you know, we actually believe that the terms of the Small Business Lending Fund that we have put down, as Chairman Frank said, may not cost the taxpayer a penny, may even raise potential money, and they address 8,000 community banks in our country. And if we do not make an effort on the community banks, let me say something about community banks. Community banks may make up 20% of the assets. They probably hold 60% of the small business loans.
I know.
The average community bank, 80% of their lending is in either agriculture.
We know most of that. That's why we wonder why you excluded them previously from funding. If they're so important, why they weren't given any help before?
They were. This is a very important point. They were eligible, and more than 600 of them who applied backed off because they felt that the TARP stigma what discouraged them from doing that. Even though in this context, it is not to bail out. It's not to bail out the bank. It is to encourage more small business lending because we want small businesses to expand, get credit, and create jobs. And so by taking away the TARP stigma and offering them an opportunity to get more capital, performance-based for the purpose of increasing small business lending and creating small business jobs, that this was a cost-efficient, high bang-for-the-buck method to do that. But We support, as I said in my testimony, this is multifaceted problem. It needs a multifaceted answer
Yeah.
on the demand side, the credit union side, the community bank side.
This is TARP with lipstick.
Gentleman's time has expired. The